All right, let's get right into it. We're talking about a company called BMNR, and they are at a serious crossroads. Their investors are unhappy, the market's tough, and instead of playing it safe, they're going all in. They're making these huge, high-stakes bets on what they believe is the future of the digital economy. So today, we're going to break down exactly what that wild new strategy looks like.
So where does this all kick off? Well, you've got to look at their annual shareholder meeting back on January 15th. And to put it gently, it was a complete dud. The word on the street, the general feeling from investors who were there, lackluster and disappointing. Yeah, not exactly what you want to hear when your money's on the line.
So you might be asking, what went so wrong? Well, a couple of things. First off, they'd hyped up these big-name guests, Vitalik Buterin, Sam Altman, and they were no-shows. Big letdown. Then you had the chairman trying to crack jokes, which apparently fell completely flat with a room full of people who've lost money on his company. Ouch. But the real kicker? They offered absolutely no clear plan for the future, no roadmap for 2026, nothing, just silence. Sources said it was zero material, forward-looking statements. Okay, so you can see the picture, right? You've got a really frustrated shareholder base, no clear direction. And this forces a really fundamental question for BMNR. How do you even justify your existence at this point? Why should anyone, and I mean anyone, put their money into your company? Well, their answer to that question is pretty interesting. They frame it as a choice between two different paths. On one hand, you could just buy Ethereum directly, right? A totally passive investment. You're just betting on the whole ecosystem growing over time. But BMNR, they're selling something completely different. Investing in them, they say, is an active, leveraged bet. They're not just sitting on their crypto. They're using its value as fuel to make these huge, swing-for-the-fences moonshot investments. And the analogy they keep pushing is, well, it's a bold one. They're calling themselves the Berkshire Hathaway for the digital economy. Think about that. The idea is that they take all this value they're generating from their assets, like all that Ethereum they hold, and act like a super smart capital allocator, pouring it back into what they believe are the next massive opportunities in the digital world. And that's not just talk. This whole Berkshire model is at the very heart of their strategy, and it's led them to their biggest moonshot investment yet. A move to prove they're dead serious about this. And the amount of money they're throwing at it is, well, it's pretty staggering. $200 million. That's the number. A massive $200 million investment into a company called Beast Industries. And if that name rings a bell, it should. It's the empire run by arguably the biggest content creator on the entire planet, MrBeast. Okay, so 200 million is a huge number. And it begs the question, right? What in the world does that kind of money actually buy you? Because this isn't just about buying a piece of a media company. The real value here, the thing they're really after, is something you can't just put on a balance sheet. And this is it. 450 million plus subscribers. That's what they bought. They bought a massive distribution channel. BMNR isn't really investing in YouTube videos. They're buying access to one of the biggest, most engaged audiences in the world. So here's how the strategy is supposed to work. It's basically a three-step play. Step 1, drop that $200 million on Beast Industries. Step 2, get direct access to that massive global audience. And then step 3, and this is the whole endgame, use that audience as a pipeline for their own future financial platforms. They call it wallet activation. They're trying to turn viewers into users. In short, they're buying customers. Now, look, the MrBeast deal is obviously the big, flashy headline here. It gets all the attention. But it's not the only thing they're doing. This massive bet is actually supported by a few other key pillars of their business. So what else have they got going on? Well, for one, their main bread and butter, Ethereum staking, is still growing. They just staked another 186,000 ETH, bringing their total to something like 1.5 million ETH. That's over $5 billion worth. They're also saying they're ahead of schedule on a key performance metric they call the Alchemy of 5%. And then there's this new BitMine app. But honestly, they've been super vague about what it even is, which has left a lot of people wondering if it's a real product or just, more talk. And that vagueness really gets to the heart of the main risk here. There's this quote from an investor that just nails it. The stock is driven more by narrative than numbers. And that's the big concern, right? Is this a solid company with real value, or is it all just a really good story propped up by flashy announcements? So let's break down those internal risks a little more. First, you've got dilution.
Shareholders actually approved letting the company issue 50 billion new shares. That's a lot, and it could water down the value for everyone else. Second is execution. I mean, these moonshots are a total gamble, and that BitMine app, who knows what that is? And finally, there are real concerns about governance, about a small group of people controlling the company and pushing a narrative instead of focusing on results.
But here's the thing. The challenges for BMNR aren't just internal. Even if they get everything right on their end, there are some huge external forces that could completely derail their entire plan.
In a perfect example of that is something called the Clarity Act. This was supposed to be a major bill to create a clear market structure for crypto in the US. Everyone thought it was going to pass. But as you can see, support has totally cratered. The whole thing is stuck in legislative gridlock, and that creates massive uncertainty for the entire industry, including BMNR.
So why the sudden gridlock? Well, it's pretty much down to political infighting. The CEO of Coinbase, Brian Armstrong, pulled his support for the bill. Why? Because of a key provision that would ban yield on stablecoins, a move a lot of people see as just protecting the big traditional banks. Apparently, this infuriated the White House, and now they might pull their support too. The whole thing's a mess, leaving U.S. crypto regulation totally up in the air. Which brings us all the way back to the beginning. We're left with this one massive question. BMR is betting the farm on this incredibly high-risk alchemy, turning digital assets into these wild moonshot investments. So, are we watching the birth of the next great digital investing powerhouse, a real Berkshire Hathaway for the 21st century? Or is this whole thing just a cautionary tale in the making?